Sorry about that. So I guess I was on mute. So just in this webinar, we'll be talking about markets in general. That will be I'll be mostly presenting two slides reviewing the markets, mostly on index performance, and then I'll be talking about a latest rebalancing, which has caused a lot of portfolio changes in passive products. So my main focus will be on the rebalancing which has taken place recently. So very quickly in terms of market update, last 1 month has been sorts of again from market performance point of view pretty range bound. We see Nifty which is just around 80 basis point positive, which is 0.8%. If you look from a 3 month point of view, it is minus 3.2% negative. Even when we are looking at next 50, that is 3.2% positive. On a 3 month, it is also negative by 1.2%. If we are looking at mid and small cap, both are around 1.2 to 1.4% positive, but on a 3 month note, it is almost 4% negative and 5.8% negative. Most of the run up which has happened recently has happened in PSU Bank, which is positive by 11.4% in last 1 month, positive by 4.8% in last 3 month period. If we look at other sectoral, then one of the major gainers has been Nifty Metal, which is roughly around 9.7% positive in last 1 month, and 6% positive in last 3 month period. I think I can sort of throw auto also in that category. Auto, which had been doing poorly. It's roughly around 6.3% positive in last 1 month and 11.8% positive in last 3 month period. In terms of major draggers, it's NSC IT index, which is 4% negative in last 1 month and 13.1% negative in last 3 month period. If we are looking at consumer durables, it is also negative 4.8% in last 1 month period. Healthcare and pharma has also been laggard, more than 1% negative. So mostly, if we look at the market, broad-based markets have been pretty sorts of range bound in last 1 month. I think GST 2.0 is a big positive for I think for economy, for consumption story, and for a lot of sectors, but I think it will take a while to play out, right? Most of the benefits of GST 2.0 is being implemented and now being passed to the consumers. I think over a period of next 6 month, 1 year, we'll start seeing sorts of benefits from GST 2.0, from income tax cuts which were implemented, and expectations are that new pay commission will also add on to that. So we continue to remain bullish on consumption, especially discretionary consumption, where one of our product, which is new age consumption, is something which we are sorts of talking about and pushing more. Now, from a valuation point of view, valuation obviously has been talked about a lot in last 1 year or so. And if you are looking at Nifty, it is roughly around 22 PE. A bit of that is also because of what has come in Max, and Indigo has raised the PE of Nifty. Because of which you'll see a minor spike in Nifty PE, which is purely because of the inclusion and exclusion which has taken place, which I'll talk about. So Nifty is roughly trading around 22 PE, which is 15% more than what its 10-year average is. If we are looking at let's say mid cap, that's around 22%, and if you're looking at small cap, that's around 50% more than what the 10-year average has been. If you compare it with 3-year and 5-year average, the premium will be obviously different. If you're looking purely from a PE point of view, I think in last few calls we have mentioned financial services as a segment where valuations look muted, and that continues to be the case. If you're looking at financial services, the PE is around 18, which is roughly 9% lower than what it has been in last 10 years. Your bank as an index is trading roughly around its long term average, and PSU bank is around 20% lower than its 10-year average. But if you look at 3-year and 5-year average, that particular segment will look at relative premium. So if from all this, if you want our suggestion from a sector theme point of view, I think we are continue to be a bit more bullish on new age consumption, which is discretionary consumption. We continue to be bullish on BFSI. From a segment point of view, I think if you have a long term horizon, you can look at multi cap as the right segment, with around 50%, 25% each in mid and small cap. And if you're looking only from a short term point of view, then I think you should be looking at a large cap tilt, like a Nifty 50 product. Globally, if you are looking at things have been going pretty well for our international products, right? If I look at FANG, it is up by almost 6% in last 1 month. AI is up almost 9.4% in last 1 month. S&P 500 top 50 is roughly around 4.5% up in last 1 month. Hang Seng Tech Index is up around 14% in last 1 month. And when you look at almost 1 year performance, FANG up by 42%, AI up by 33%, our top 20 up by 22%, and Hang Seng Tech up by 37%. So looks pretty sorts of in a good zone, in a good momentum zone in terms of performance. And when we are looking at PE now, PE of FANG is at 38. It's relatively higher with 26% premium over 10-year average. If you're looking at S&P 500 top 50, that's around 29, which is 38% premium over long-term average. Even S&P 500, which is a broader index, that's trading at 25 PE, which is around 31% premium at its long-term average. Hang Seng Tech is right now around 28, which is around 6% premium to its 10-year average. But for Hang Seng Tech, what I'll say is that PE at times is not a right barometer, because if you look at historical average, that consists of companies which were making losses, which results in higher PE. So at times PE for tech companies in China in a portfolio doesn't throw right picture. I think if you look at MSCI China, that is around 14 PE, which is relatively lower, and whereas 10-year PE is around 12, so it is at around 20% premium to its 10-year average. Now, from a viewpoint of view, I continue to like both tech space in US and China, but relatively because of valuation, I continue to prefer China tech. But having said that, if you want to take exposure in China, you have to be prepared for higher drawdowns. So if you're okay with higher drawdowns, my suggestion will be China. And if you want to, let's say, only look at long term, not okay with drawdowns, etc., then perhaps US investments will be suggested. But then again, stagger it out a bit. This is we have entered into a US tech also. Extraordinary run up in both gold and silver at $47, as it has been a crazy one-sided move, right? YTD gold is up almost 46%. If you look at silver, it is roughly 53. And run up has been a very substantial run up. So I think consolidation of price is not ruled out, right? Anything which has run up so much, you expect consolidation to happen. Anyways, we expect gold near term price target around 4,000, silver around 4950, but we also expect consolidation to happen. So I think you should have a bit muted expectation around gold and silver. The numbers which are being thrown around in markets right now is, I think, too high. So please be a bit sort of cautious. I think this continues to be a very good investment story even from a medium term to long term point of view. But like I mentioned, that some consolidation, some price correction, some sorts of rally where you see more of a sideways move cannot be ruled out. So temporary expectations, but I think gold and silver investment should be done from an asset allocation point of view, etc. Now, very quickly, these are our offerings on the ETF side. Won't spend much time into that, but we almost have 55 products now. We have lowest cost ETFs in the market. For example, a mid cap ETF is just at 5 basis point. Our next 50 is at 5 basis point. Nifty 50 is at 4 basis point. We have index funds also, Nifty 50 large, mid, total market cap, etc. Then we have a lot of India's first thematic products on EV, new age consumption, which is our recommended product right now. Select IPO, which is one of the good performing products this year. Then we have internet ETF, etc. On smart beta, we continue to have alpha, low vol, small cap momentum quality, mid small momentum quality. And then on solution based offering, we recently launched gold and silver, which has done reasonably okay, where we do dynamic allocation in gold and silver. Then we have multi-factor fund of fund, where we do dynamic allocation in smart beta products, not only ours, but if there's any smart beta product, factor product which makes sense, which is by our peers, we invest in that also. Idea is to avoid the cyclicality of a single factor by investing in multiple factors. So that is something which we have also launched 1 month back. And then we have equity allocator fund of fund, which invests in Nifty 50, Next 50, and Mid Cap 150 category. So plethora of options. Do check out our website if you want to know any product in more detail. But like I mentioned earlier, if you want a suggestion on the theme side, I think we suggest new age consumption right now from a basket. If you are looking from the side or total market cap index, on the index fund side, but if you want a large cap, invest for this gold and silver. Now moving on very quickly, let's talk about balancing update. So this is a broad rebalancing calendar by NSC. I thought that let's put it out so that people know when these changes would have changes. Rebalancing either semi-annually or quarterly. So most of the index, their rebalancing is done semi-annually, right? And it is made effective on the last working day of March and September. So today is 30th September. The latest rebalancing got effective today. It means the changes were done end of day yesterday, right? Effective early morning today. So it means the changes were done end of day yesterday, right? Which is working day, last working day, previous wala working day, right? So all the sectoral indices, most of the thematic indices, market cap indices are semi-annually done and done in March and September. When it comes to alpha and low volatility, they are done quarterly. So only alpha and low vol products are done quarterly. Your momentum, quality, multi-factor are done semi-annually, but they are done in June and December, not March and September, June and December. Reason behind that is that typically they wait for fundamental data to get available, and that typically you won't have it in March, so they wait it out and do in June and December for momentum, quality, multi-factor products as well. There are some indexes also जहाँ पे rebalancing is done on an annual basis, like Nifty 50, Value 20, Dividend Opportunity 50. So there are plethora, but if I have to summarize, in most of the market cap and sectoral indices, the rebalancing is done semi-annually, effective last working day of March and September. In case of alpha and low vol, it is done quarterly, last working day of March, June, September, December. In case of other smart beta products like quality, momentum, multi-factor, it is done semi-annually but done in June and December. Right? So इस महीने changes were done in alpha but not in momentum, and you will see the stark difference between. This is a very sorts of bird's eye view of what changes have taken place. The first section consists of all market cap based indices, and for the sake of simplicity, I have only captured the market cap indices which we cover or which we have product on. So for example, Nifty 50, there were two changes. Two stocks came in, two stocks went out. जो stocks अंदर आए उनका weight was around 1.8%. You can see weight of incoming stocks, and stocks जो बाहर गए, whichever went out, was 1.1%. Right, on the stocks which 0.7%. So obviously, net of outgoings and net of absorbed और remaining stocks. Nifty equal weight, जो stocks अंदर है उनका weight था 4%. Very quick question. 1.8%, but Nifty 50 equal weight was 4%. The answer is that Nifty 50 equal weight, each stock has a weight of 2. Unka weight is 4%. 54 stocks came in, 4 stocks went out. 4.6% weight था जो stocks अंदर आए, जो stocks बाहर गए उनका 7.7% weight था. Remaining again weight was shift was the stocks which continued. Mid cap, 13 stocks came in, 13 stocks went out. But look at the aggregate weight. The stocks which came in had a weight of only 7.8%. So very less, lower weight shift, right? There stock change हुए portfolio में, but only 7.8% was the weight. Large mid cap, 9 stocks came in and went out. Multi cap, 18 stocks came in and came out. Look at the weight of the incoming stocks, 1.3%. What does it suggest? That most of the stocks which came in were on the lower end. So it was mostly, let's say, small cap stocks. Tail stocks का weight कम होता है. Mostly changes were there only. That's why even though 18 stocks moved in, their total weight was only 1.3%. Total market cap, 34 stocks came in and went out. Their aggregate weight was just 0.8%. So that is how small the change was in terms of weightage for total market cap, multi cap. I think if I have to highlight impact was more on the large cap indices in terms of weightage. When it came to sector, there was no change in bank, no change in PSU bank, no change in IT, no change in metal, just one change in financial services, which we'll talk about. Hardly 1.9% weight change. Then, from theme point of view, three stock changes in new age consumption, four stock changes in India manufacturing, three stock change in EV and new age automotive, and no change in internet index. Two stock change in low volatility, जिनका weight 6.6% है, is have high churn, and that is the strategy. You typically seek to capture stocks which are doing well, or not, and remove stocks which are not doing well. You see 11 stocks have come in and moved out of 30 stock portfolio, and that churn is almost 33.8%. So 33.8% was the weight of the stocks which came in the Alpha 30. Also, one reason why Alpha 30 has very lot of stock changes is that uski capping hoti hai. So top stock is capped at 5%, and it's only a 30 stock portfolio. So har stock ka weight is pretty reasonable. So even when 5-6 stocks move out, their weight is reasonable compared to a TMF, जहाँ पे bottom stocks का weight is like 0.01%. In Alpha, even a 5-6 stock. So this is a summary of what has raising their hands. You can post questions in the section. So in Nifty 50, Indigo and max weight is 0.7%, right? And hence 1.8% अंदर आया. The stocks which went out is IndusInd Bank and Hero Motor. So 1% stock went out. If you remember, last time we talked about that stocks jinka. So how does Nifty change take place, right? So every time they look at impact, cost, and eligible stocks, and then finally when you have eligible stocks ki list, they only pick out stocks which have 50% higher free float market cap than the last stock, or stock which it is challenging to replace. So for example, let's say again from maths point of view, अगर last stock का free float market cap 50,000 करोड़ है, like in Nifty 50, and जो stock अंदर आने की कोशिश कर रहा है, उसका उसका market cap 75,000 करोड़ है. तो दैट इज 50% हायर फ्रॉम 50,000 करोड़ का जो एग्जिस्टिंग है, 75,000 करोड़ का जो बाहर है, इट्स 50% मोर. Then only if it is 75,000 or more, then only the stock will get replaced. So you can see in a way your Max Health replaced IndusInd 46 versus 83, and your Indigo replaced Hero Motocorp, which is 1,21,000 crores versus 68,000 crores. So you can see that there is a difference of more than 50% in stocks which are replacing the existing stocks, and that's why this was allowed. Reasons obviously is that your Indigo free float has also increased, right? Because a lot of promoter selling has happened. Also the weight or rather the market cap of the stock has also increased. You can see that Indigo 1 year return is almost 16%, Max is almost 12%, whereas IndusInd and Hero Motocorp has fallen by 50% and 7% respectively. So all these things played its part in sorts of reshuffling rejigging the portfolio in Nifty 50, and lot of buying and selling happened yesterday in these stocks, and you can see the price movement also, and that is something which will be sorts of highlight the impact of Nifty 50 changes. Now look at next 50. In next 50, four stocks came in and came out. As I mentioned, your Dabur India, Interglobe, ICICI Prudential, and Swiggy moved out. So Indigo moved out. So Indigo moved to Nifty 50. Remaining sorts of moved down, I think, to mid cap itself. We'll check out. And what has moved in? Siemens Energy, Hindustan Zinc, Mazgaon Dock, and Solar Industries have moved in. So now I think next 50 portfolio has been PSU companies, railway companies, etc. Now you have Solar Industries, Hindustan Zinc, Mazgaon Dock. Let's say very interesting because it has several other PSU offerings as well in the port. Like I mentioned, that all stocks moving in. Next 50, how is next 50 created? Next 50, how is 100 is created through it is selection is based on full market cap. तो वहां पे न्यू एंट्रेंट हैज टू रैंक इन टॉप 90, then only it will be compulsorily excluded. Existing stocks has to move out of 110, 110th रैंक के बाहर होना चाहिए, then it is compulsorily excluded. राइट ऐसा क्यों होता है? टू बफर. ऐसा नहीं होना चाहिए दैट इफ देयर इज अ माइनर फॉल इन रैंक 101st stock should not move out automatically. That's bad. It will create too much of changes in the index, right? So full market cap selection hota hai. Top 90 stocks by rank is compulsorily included or continued. Outside 1110 is compulsorily excluded, right? And 100 stock portfolio is created, and that's why probably you'll see that. Just look at the full market cap. So in Nifty 50 I was talking about free float. Here look at full market cap. You will see Dabur India 88,000, ICICI Prudential Life 84,000, Swiggy 1 lakh. But what is coming in? Siemens 125, Hindustan Zinc 189, Mazgaon Dock 114, Solar Industries 124. So all has the biggest full market cap, right? And फिर क्या होता है Nifty 100 बनने के बाद? First is Nifty 50 created, and remaining 50 stocks are Nifty Next 50, right? And also, just to sorts of if you're looking at data for September rebalancing for market cap comparison, NSE looks at 6-month average data, which is July ended, for September inclusion and exclusion. So obviously what I am presenting here is the latest data, but what NSE is looking at is basically July ended average 6-month data. Okay. Now let's look at mid cap, and as expected, you'll see Dabur, which is moving out of Nifty Next 50. You'll see Dabur, Fertilizer and Chem, Godfrey Philip. You'll have Hero Motocorp, Hexaware. So Hero Motocorp from Nifty is coming directly to mid cap 150. You also see Indus Bank here. So Nifty 50 says stock has not gone to next 50. It has directly moved on to mid cap 150, which is pretty stark, right? So you see Hexaware, you see IDBI Bank, Indian Overseas, ITC, Procter and Gamble, Swiggy, Yuko. So I think a good list of companies which are becoming part of mid cap 150. Two of them have moved out from Nifty 50, and few of them have moved down from Nifty Next 50 as well. Stocks which are moving out: Imami, Hindustan Zinc, right? Hindustan Zinc is and Solar Industries. Both of them are going up to Next 50, right? You saw Health at 20, Bandhan 650, Grand Pharma, Max Health, segment as the stocks, I think in terms of depends, see that Hindustan Zinc, Solar Industries, you have Mangalore Refinery, Mazgaon Dock, all those are sorts of moving out. No change in metal, uh, bank, PSU bank, and IT. So no change in these four very well followed index, which is metal, bank, PSU, bank, and IT. So basically, rebalancing was assessed, but no changes took place. When it comes to us, we sorts of have these sector and thematic products as well. So in terms of what we have, there has been change in financial services, which is obviously it has an FNO on it. So HDFC Asset Management has moved out. BSC has come in. I think obviously the main trigger has been the fact that BSC has run up quickly and its free float market cap has risen significantly. Then there has been three changes in new EV and new age automotive. So Ether, Force Motor, and Schaeffler India has come in, whereas ZF Commercial, Minda, and Ratan India has moved out. Um, if you are looking at new age consumption, which I mentioned is one of the products which we are pitching, Aditya Birla Lifestyle brand, ITC Hotels, and Saregama India has come in, and Westlife, Raymond, and Network 18 has moved out. So no major changes, but I think three changes in EV and new age consumption, respectively. Financial services one. Now let's talk about Alpha 30 because I think this is one product which is tracked from a portfolio point of view quite a lot. Right. So first, most importantly, and which is why I like Alpha as a strategy from NSE, कि यहाँ पे index changes happen on a quarterly basis, and I feel that if you are trying to capture a momentum segment, you have to review frequently, a bit not too frequently, let's say not monthly, but at least quarterly or so. So changes have only happened in Alpha and not in momentum, right? Which I think is a good thing for Alpha portfolio, right? So let's see what has moved in, because I think there are some interesting numbers, and there are some numbers which you will typically not associate with Alpha or momentum play as well, which just highlights that in bad time, Alpha will shift towards segments which are falling less, right? Or which are relatively more sturdy, or sorts of relatively when the cycles are turning, your cyclical stocks might be falling more, but your defensive stocks may be sorts of falling less. So at times you Alpha. So Alpha, what has come in? Aditya Birla Capital has come in, which is 2.6% of the portfolio, 3.3%. iShare Motors has come in 3.5%. Fortis Healthcare has come in 3.8%, 2.4%. So interesting, right? HDFC Bank has come in Alpha portfolio, right? So it's about the fact that this entire process is method driven. Whatever is conforming to the numbers, that will become part of the portfolio. That's the beauty of passive product. So you have Indian Bank, which has come in, L&T Finance at 2.3%. You have Mahindra and Mahindra at 2.6%. Maruti Suzuki 2.7%, TVS Motor 2.9%. So a couple HDFC AMC, HDFC Bank, you have Indian Bank, couple of things, several companies from auto segment as well. What has moved out? Trent has moved out, Shriram Finance, Info Edge, United Spirits, Jubilant Foodwork, Cholamandalam, HDFC Life Insurance, Kalyan Jewelers, PB Fintech, Persistent, Lupin has moved out. So if you ask me, I think portfolio has become a bit more sturdy in terms of its composition, right? And if you look at 1 year return, you will see that why these changes have taken place. Just look at how, for example, Bosch, iShare, Fortes, all these have played out. Even if you're looking at HDFC Asset Management from a 1 year performance point of view, or Indian Bank or L&T Finance from a 1 year performance point of view, how that has sorts of played out. Like I mentioned earlier, there's almost 11 stocks which are moved in, moved out, and one way portfolio churn was 39.4%. So this is in terms of weightage or the final portfolio. The top stocks are Fortis, BSC, Coforge, 197, Max Financial, Max Health, Dixon, Zomato, Muthoot, HDFC, Solar, Bharat Electronics, Eicher Motor, Bosch, Bajaj Finance, Indian Hotels, TVS Motors, UPL, Bharti, Maruti Suzuki, Mahindra and Mahindra. And if you go down, say HDFC Bank, L&T Finance at 2.4 and 2.3% respectively. Then comes SBI Card and Glenmark Pharma. In terms of changes in holdings, you can see that weightage of NBFCs have got down slightly, but within BFSI you can see that that there's obviously inclusion of several companies, especially let's say AMC, which is HDFC AMC. So NBFC has got down a bit, but hospitals have increased. You see two-wheelers and passenger cars have also increased. So you have now more component, more automobile presence in this particular portfolio. IT has gone down, fintech has gone down, life insurance and pharma has gone down. So pharma has gone down, but hospitals have increased. You have now presence of asset management investment company, then you have public sector bank and a private sector bank also present here. So if you look at from a company, I think representing is the completely specialty retail. Trent, Gems, Kalyani Jewelers, that has gone out. So, portfolio more now. Nifty 100 low wall 30. Only two changes have taken place, like in at 3.5% and 3.1% weight respective, and also and Dabur has also gone out. Reason being that it has sorts of moved out of Nifty 100 universe as well, right? So within the eligible universe, which is Nifty 100, low wall is selected, but Dabur and Hero Moto has moved out of the eligible universe itself. So selection में आया ही नहीं, consideration में नहीं आया, because it is no more a large cap company. As per NSE, it's a mid cap company. And State Bank and Shree Cement has come in. Very minor tweaks. If you look, the State Bank comes after ITC, HDFC, ICICI, Nestle, Hindustan Unilever, and Tata Consultancy. Then comes SBI, and Shree Cement is also there at 3.1%. And this is what I was mentioning, that because the weights are so close by, it's well distributed, right? Let's say top stock is at 4.5%, bottom stock is at 2.5%. So 2% is differentiating top stock and bottom stock, and that is why even if 3-4 stocks move out, you feel that weight you see that weight churn is on the higher side, but I think low vol typically you don't see much changes, and I think this change also is justified based on the fact that two stocks, Dabur and Hero Motocorp, has moved out of Nifty 100 itself, which is the eligible universe. So this is all on NSE indices. BSE changes also took place last to last Friday, and only index which was impacted was BSE Select IPO. This is one of the better performing products. NFO was done this year itself. So what has sort of moved out is IRCTC and RR cable, and what has come in: Go Digit, Premier Energies, Raymond Lifestyle, Bajaj Housing, Hyundai, Wari, Afcon, Sagility, Acme, Swiggy, NTPC, Green, etc. And if you look at the portfolio, I think this is a portfolio right now, and very sorts of good portfolio, I'll say, of recent IPOs and spin-offs. You see top stock being PB Fintech, Max, Macrotech, Geo Financial, Zomato, Mankind, 197 SBI Cards, FSN, IRFC, Hyundai, Sona, Kalyan Jewelers, CAMS, Mazgaon, LIC, Hitachi, Flip Delivery, Gland Pharma, Angel One, Tata Technology, Nuama Wealth, Swiggy, Go Digit. You see go down further and you'll see names like Afcon, Ola, you'll see Adani Wilmar. So all the latest IPOs and spin-offs are included if they form part of BSE 500 space, and they are typically kept if they continue to meet the eligibility norms for a period of on yeah, I think that's what I was wondering. So in terms of, yeah, in terms of IPO, please sort of uh, excuse me for that one. Yeah, this is the correct slide. So Niva Bupa, Ether, and have moved out. Very quickly, these are the of and I've already talked about it, so I won't go into much detail. Again, if you're looking on a for investments on a theme side, our suggestion is new age consumption. On the commodity side, we like gold and silver passive fund of fund, which we have launched recently, which will invest into both gold and silver. Do the allocation in commodities based on their relative attractiveness. If you're looking on the broad market side, my session will be multi-cap. On ETF side, total market cap, index fund on the index fund side. But if you're looking for a large capital, then obviously Nifty 50 ETF and Nifty 50 index fund is to go for. So that's it from me. I'll be stopping the presentation and taking the Q&A. So if you have any questions, please post it on the question box and I'll be taking them one by one. So obviously, as always, the first question is on international products itself, which is basically Sunil is asking if or are all international funds open for investments, mutual funds. So as far as Miraset is concerned, our all international funds are closed for investments. ETFs continue to trade on the exchange, but they are trading at high premium. So please check INAV before buying or selling those ETFs. I will not suggest you to buy at a significant premium. There may be other international funds of other AMCs which may be open at this point in time, so you need to check out, because depending on redemptions, some schemes get opened, and when they collect the money and fill up the room which was made available due to redemption, they get closed again. So do check other mutual funds. But as far as we are concerned, our funds are closed. ETFs are trading, but they are trading at premium. So please check INAV before buying and selling those products. There's one question by Ashwini Kumar. Do you have liquid ETF that pays dividend in cash, either monthly or weekly? Basically, we have ETF which is a growth and an ETF which is dividend, but the dividend payout is paying in terms of units and not in terms of cash. So Arvind is asking stocks entering Nifty 50 were earlier in Nifty Next 50. So Arvind, I've already talked about it. There are, I think, stocks have been a mixed bag. I think if I remember correctly, your Dabur and Hero Motocorp from Nifty 50 is moving directly to mid cap 150, and your mid cap stocks, several of them are sorts of moving into Nifty Next 50. Asking, I have invested in negative returns and no sign of strategy. So, Paresh, very good question, and I think I should address uh, in that particular time. So what I'll suggest say is that alpha right now is a good strategy, but if you are willing to hold it for, let's say, at least 4 to 5 years, if you are from a next, let's say, 3 month, 6 month point of view, I'll expect alpha product to remain in this zone only. I must say that portfolio has become a bit more sturdy if I'm looking at names which have come in. So that's a good thing. But in terms of recovery and performance, probably I will not expect anything in very near term. But in the long term, I continue to remain, or medium term, I continue to remain positive on that particular product. So if you're willing to hold it out, then hold it out for next sorts of positive cycle for Indian markets. Or like I mentioned, the portfolio has become more steady. So my downside risk looking at the portfolio has lowered a bit. But I expect alpha to do well when market starts sorts of recovering as well, and not remaining sideways. So there's again one question by Sanjay Patil. When will we restart in reinvestment in artificial intelligence fund of fund? So that will depend on SEBI allowing us to start taking money for investment in offshore schemes. So once we hear from SEBI and RBI that industry limits are revised and we can accept money in our offshore schemes and deploy it outside, we'll restart that particular scheme. So there's one question by Rajesh who is asking, aren't the indices biased towards growth stocks? I mean, will these indices underperform when value does better in the market? Uh, so that's a fair question. But see, typically consist of, so when you talk about market cap based products, right? So market cap based indices, so it simply tries to capture the segment which it intends to capture, right? For example, IndusInd Bank has fallen so much. Is it true to continue that in Nifty 100 and a large cap category? Answer is no, right? So IndusInd, probably from your metrics, after falling 50%, while there are a lot of there are several issues. So probably it's a bad example, but let's say IndusInd Bank, because it has fallen, it becomes a value stock, or some other stocks become a value stocks stock. So you can obviously invest in a contra or a value fund, right, where such sort of strategy is followed. But when it comes to creating a Nifty 100 or a mid cap or a small cap, whichever stocks is no more a large cap, no more a mid cap, it's a market reality, right? And it should be removed. So yes, if the if that particular stock recovers, then the portfolio has missed out on that return. But then ultimately, that stock was never supposed to be part of that portfolio, right? Because it didn't remain a large cap stock, or didn't remain a mid cap stock, or didn't remain in a top 10 banking into value or a contra strategy. There are, in fact, ETFs also and active funds also. You can look forward for that. But as far as passives are concerned, passive typically capture stocks which meet the methodology at that particular point in time. There's one question which I'll take is. I have 10. So Dhyanand Kamath is asking, I have 10K to invest every month. Suggest good fund, aggressive one is okay. So at this point in time, uh, what I'll suggest is multi-cap 50 25 25. 50% is in mid cap and small cap, and 50% is in large cap. I think it captures the entire market, wherein it captures 50% of small and mid, which I think is a good way to invest right now. So you continue to be there in the large cap side for stability, but you are there almost 50% in mid and small cap, and that is something which will give you a kicker. Also, if you are looking, you can look at new age consumption, on which we are bullish on. So new age consumption is an ETF as well as fund of fund. You can pick either depending on your preferred product. Paresh is asking how to make our portfolio hedge to downside or currency depreciation. So Paresh, I think the only thing which you can do is look at asset allocation, invest across asset classes, commodities, international, some bet on the debt side, and equities. So it is right now it is prudent to look at asset allocation. Multi-asset investment is something which I'll suggest. So Pradeep is asking at this point in time which funds are good to suggest to the customer. I've already mentioned that you can look at multi-cap ETF or total market cap index fund. In theme, you can look at new age consumption, and in commodities, I'll suggest have lower expectations. And with us, you can look at gold and silver fund of fund. So there are a couple of questions on on where to invest. I've already just talked about it. So there are a couple of stock specific questions which I am not allowed to take due to compliance issues. So sorry, I won't be taking them. What is the expense ratio of new age consumption ETF fund? Do we have concept of direct? So Arvind, this question is by Arvind. So Arvind, our new age consumption fund, which is fund of fund, the direct plan will be. So I don't have the data in front of me. So please do check out. The direct plan will be around 45 basis point, which includes the cost of underlying ETF. So it's not, so we typically, whenever we are constructing fund of fund, we do not charge very high direct fees for fund of fund, and that's why our underlying ETF and direct plan of fund is, I think, reasonably priced. So it should be around 45 basis point. So do check out. I think you'll find that to be pretty reasonable. So Pinku, so perhaps I'll recommend our ETF only, which is Nifty 200 Alpha 30. It remains in the large and mid cap side. I think portfolio has gotten more sturdy, but I'll suggest, like I answered earlier question, that have lower expectation for next 3 months, because markets are sideways, and sideways market typically alpha does not do really well, but from a long term point of view and medium term point of view, pretty bullish on that product. One is Chandra Joshi is asking by when the market will stabilize approx. I think probably we'll have to wait for 1 or 2 more quarters for market to stabilize. I think one of the main sorts of factor which will be watched and which will result in stabilization of market is corporate earnings recovering, and I feel that because of these recent reforms from the government, we might start seeing some impact on corporate earnings by let's say after 2 quarters or so, and that is when I expect market to stabilize. So probably not in near 2-3 months, but probably post that. Uh, which of your ETFs has lowest TER? That is Venkatesh Sundaram. So our Nifty 50 ETF is around 4 basis point. Our next 50 is 5 basis point. Our midcap 150 is at 5 basis point. So those are the ETFs at lowest TER. If you want to see our expense ratio, we publish passive fact sheet on a monthly basis. Just write Mirai Asset passive fact sheet on Google, and perhaps you'll get the last fact sheet, and there you'll find, I think, all our passive products, summary from a TER, summary from underlying index performance also. And I think that's a very useful tool. You'll see all the index performances for recent period and longer periods, SIP performances, TERs, etc. I think that there's one follow-up question, which is that I think same person who asked about uh, indexes being growth tilted, whether we are removing stocks which are not doing well, and whether that is compromising the index performance. So I answered, and he seems to agree with it, but is asking about smart beta like low vol, etc., where even recent price increases are rewarded. So sorry, I forgot your name, but that is not the case. Each strategy is different. So, for example, in low vol, only stock is selected based on lower standard deviation of price movement, right? Not performance. When it comes to quality, you are basically selecting based on return on equity, debt equity ratio, and profit variability. And when it comes to value, you are looking at P, PB, where obviously price is factored, but you're looking at inverse of P. So in case of momentum only, because momentum as a strategy is something which where you have sort of agreed to invest in a portfolio where stocks are selected based on recent performance. So there obviously stocks will be selected based on recent performance, but in case of other factors, depending on the method, that is not the case. There's one question by Rajesh whether there are such a large number of factor funds, smart beta funds in market, and it is very confusing to choose. Can you guide or suggest which ones are suitable for long-term investors looking for 10-year plus horizon? So Rajesh, a very good questions for us also, because we have recently a month back launched a Mirai Asset multi-factor passive fund where we are investing in around 7 ETFs. So we are investing in top 15 value, top 200 alpha, low volatility, Nifty 50 equal weight, BSC 200 equal weight, mid and small cap momentum quality, and small cap momentum quality. And we shift the weightage based on market expectations, where we sort of expect the product to do well. So you can look at that particular fund if you want a professionally managed scheme where allocation is being changed in factors in smart beta based on market regime, market conditions. Otherwise, if you want to do by yourself, and if you're looking at a 10-year horizon, I think you can look at Nifty 200 Alpha 30. Yes, that product will have higher drawdowns. But since you're asking for 10-year plus horizon, I think from a 7-year plus point of view, if you are willing to ignore drawdowns, willing to ignore volatility, you're looking at that investment and have to pick one factor, you can pick Alpha 30 and you can invest in a staggered manner. Invest in a staggered manner for next 3 months, 4 month period, 3 month to 6 month period, and then obviously see the performance over next 10 years or so. Or you can do SIPs also. I think that is also good for alpha product. Any volatile product, SIP is actually better way to invest in it. So I think I'll just take two, three more questions. There's one question: which mutual fund is good for SWP? So Nitin, I especially am not aware where you have invested, etc. So SWP is a facility which you can use, I think, in any of the equity funds, but it depends on obviously where you have invested and what is your actual investment objective, etc. So I will perhaps won't be able to answer it, but just maybe with more details you can let us know or contact your advisor and it'll be able to help you out. So Ishwar is asking whether Mira will be launching SIF products. Yes, we will be. We have got the approval for that. Amrish Ramaya is asking allocation of gold and silver percentage wise in the scheme. So gold is roughly around 46% and silver is roughly around 54%. For new age consumption FOF in ETF, what should be the holding period? I think where we are sitting right now as an entire market, I think any investment in equity mutual funds, you should at least look at a 5-year horizon. So K Kumar is asking, do you have any defense ETF? Is it right time to invest in defense? So we don't have defense ETF. We'll come out with it. I think defense has still a lot of legs to go, but I'll suggest to do it in a staggered manner at depths. If you're looking at a current point in time, anonymous attendee was asking which ETF mutual fund is suitable for my daughter, 15 years for long term. I'm not sure what investment horizon you are looking at. If you're looking at, let's say, 5 year or so, I think multi-cap 50, 25, 25 is one of my preferred product. But if you're looking for a very short term, let's say an year or so, I think I'll tilt towards large capish allocation. Prakash is asking, sir, is it right time to start SIP in diversified index for long term or wait for 1 or 2 more quarters? I think when markets are choppy, volatile, it's better to do SIP. Then you'll perhaps get good, better average acquisition price. So look at opportunities when markets are correcting. In those days, you can obviously enter the market. So what I'll probably suggest, if you are sort of someone who tracks the market on a daily basis, look for dips in the market and invest at those point in time, or can do a SIP, right? So there's one question by Dayanand, started investing in multi-factor passive fund of fund. Thank you so much for your faith in us. Devesh is asking this: what is the framework for deciding changes in multi-factor Mirai multi-factor fund of fund? Devesh, so you can visit our website, look at the presentation. I will take an entire 1 hour to talk about it, but very quickly we look at market regimes. We look whether the market is frothy, whether we look at the market from a valuation point is okay, which is a base regime, or it is somewhere in between. And depending on those classification, we tilt towards aggressive factors or defensive factors. For example, in frothy markets, we'll tilt towards defensive factors like low volatility, Nifty top 15, top 20, etc. When markets are not frothy, for example, base regime, etc., will tilt towards alpha, will tilt towards mid and small cap, will towards BSE 200 equal weight, etc. So yeah, Nanta is asking which is that mutual fund which you mentioned now invest in seven ETFs. So it is not it is yeah it is Mirai Asset Multi-Factor Passive Fund of Fund. It runs the asset allocation model and invest in not just seven, but yeah it invests in multiple multi-factor or multiple factor based products. I think one last question. Yeah, I think I have covered almost everything. So thank you for all the questions. I hope I have answered all of you. In case I haven't, please contact us through social media channels or please mail us. We'll be happy to answer your queries. And thank you for joining this webinar. I hope I was able to give some view on the update on the market as well as update you about the portfolio changes due to latest index rebalancing. So thank you again, and have a great evening ahead, and see you next time. Next month, where I'll be focusing more on the market updates and not on the index rebalancing, which now mostly will be happening in the month of December. Great. So thank you so much.